Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. The governor of the Central Bank of Iraq, Alaq, recently made a significant announcement regarding the financial sector, indicating that a major transformation is set to take place in the banking industry on Saturday. His remarks emphasized that Iraq is on the verge of a comprehensive digital transformation within its financial system. This statement has sparked interest and speculation within financial circles, particularly among investors, economists, and those closely monitoring Iraq's monetary policies. The nature of this transformation, its implications for the Iraqi banking sector, and the broader economic landscape of the country are all critical points of discussion. One of the first and most pressing questions that arise from such a statement is whether this transformation will take place under Iraq's current program rate. The program rate refers to the official exchange rate set by the Central Bank of Iraq, CBI, in coordination with international financial institutions such as the International Monetary Fund, IMF. Historically, Iraq has operated under a controlled exchange rate system, where the value of the Iraqi dinar has been managed rather than allowed to fluctuate freely in the open market. This controlled exchange rate has been a crucial component of Iraq's monetary policy, ensuring stability in a country that has faced decades of economic challenges, political instability, and external pressures. However, in response to the question of whether this upcoming transformation will occur under a program rate, financial analyst Frank has provided a clear and direct answer. No, not on a program rate. This response suggests that the imminent changes in Iraq's banking sector are not designed to function within the constraints of a fixed exchange rate, but rather as a precursor to a more significant shift in Iraq's financial landscape. Frank further explains that this announcement serves as another indication, another clue, and another piece of evidence pointing toward a much larger economic transformation. The reforms and changes being implemented are not being carried out with the intention of maintaining the status quo. Instead, they are part of a broader strategic plan aimed at positioning Iraq for a major financial shift. To fully grasp the significance of this transformation, it is essential to understand the broader context in which these changes are taking place. Iraq's financial sector has long been plagued by inefficiencies, a heavy reliance on cash transactions, and a lack of integration with the global banking system. Many of these challenges can be traced back to the country's turbulent history, including wars, sanctions, and political instability that have hindered economic progress. However, in recent years, the Iraqi government and the central bank have been taking significant steps to modernize the banking system, improve transparency, and align the country's financial policies with international standards. One of the key elements of this modernization effort is the push toward digital transformation. Digital banking and electronic payment systems are becoming increasingly essential in today's global economy. Countries that embrace digital financial systems benefit from increased efficiency, reduced corruption, and greater financial inclusion. The introduction of digital banking solutions is also closely linked to Iraq's ongoing efforts to combat money laundering and financial crime. For years, the Iraqi banking sector has faced scrutiny from international regulators due to concerns about illicit financial activities. The lack of robust digital infrastructure has made it challenging to track transactions and enforce financial regulations effectively. However, with the implementation of digital financial systems, the central bank aims to enhance oversight, improve regulatory compliance, and build trust with international financial institutions. Another critical factor driving this transformation is Iraq's engagement with the IMF and other global financial organizations. The country has been working closely with these institutions to implement economic reforms and improve fiscal stability. The IMF's Article 4 consultations with Iraq have emphasized the need for structural reforms in the banking sector, including the adoption of modern financial technologies and the development of a more transparent monetary policy. The digital transformation of Iraq's financial sector aligns with these recommendations and represents a step toward greater integration with the global economy. Frank's statement that all of this preparation we are witnessing is not for a program rate and the world knows it suggests that the actions being taken by the central bank are laying the groundwork for a substantial shift in Iraq's exchange rate policy. The emphasis on preparation indicates that these changes are not random or isolated measures, but part of a carefully coordinated strategy designed to prepare Iraq for a new financial era. The reference to the world knowing about this transformation implies that international financial institutions, investors, and policymakers are all aware of the direction in which Iraq is headed. This perspective aligns with broader trends in global finance. Many countries that have undergone economic reforms similar to Iraq's have eventually transitioned to a more flexible exchange rate system. For example, countries that have moved from fixed or pegged exchange rates to floating or managed float systems have often done so as part of a broader strategy to enhance economic competitiveness, attract foreign investment, and improve monetary policy effectiveness. In conclusion, the recent announcement by the governor of the central bank, Alaq, signals a major step toward modernizing Iraq's financial sector. The emphasis on digital transformation, regulatory improvements, and economic reforms indicates that Iraq is preparing for a significant shift in its financial landscape. While there is speculation about the future of the Iraqi dinar's exchange rate, it is clear that the changes being implemented are not designed to sustain the current program rate. Instead, they are part of a broader strategy aimed at positioning Iraq for a more dynamic and integrated financial future. The global financial community is closely watching these developments, as they have the potential to reshape Iraq's economy and influence its role in international markets. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi Dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi Dinar. See you in the next update.